Guys, this is S&P 500 weekly technical analysis for the week of August 26th. Now the S&P 500 as well as the entire US stock market has gained the bullish direction, the bullish trend, and the S&P 500 and Dow Jones is 100% absolute bullish on the daily charts. And now we are anticipating more bullish movement in the S&P 500, but this bullish movement is not because of the S&P 500 itself. It is because of the trendline breakout in case of the Dow Jones. This means that now Dow Jones is responsible for the bullish movement and not the S&P 500 or the Nasdaq. And this breakout is more meaningful because on Thursday, on 22nd, there was a heavy fall in the S&P 500. And this heavy fall was because of the S&P 500 itself and also because of the failure to sustain at that trend line in case of the Dow Jones. And this was my first update on August 22nd, Thursday, to my Patreon community members at 10:30 a.m. Eastern Time in the morning. And here I mentioned that because of the formation of heavy technical bearish candle and also the closing was below the heavy resistance level, and also the Dow Jones has seen a rejection from the trend line. So all of these conditions are indicating an intraday fall or intraday heavy bearish pressure. And then in my second update on August 22nd to my Patreon community members, I mentioned that although we are anticipating a movement to 5550, however, there are heavy chances that the S&P 500 can breach 5566 and then recover instantly rather than going for 5550. So here you can see it came down, it breached 5566, it was 5561, the lowest price on Thursday, and then there was a little recovery and it closed at 5571. But now because the Dow Jones has sustained and has closed above the trend line, that is why this bullish candle is very significant, indicating continuation of the bullish movement. However, there is just one condition, and once the S&P 500 fulfills this, the strong condition, then it is free to move up. So I will discuss all of this, the trend line breakout, implications, bearish movement, bullish movement, everything in detail in this S&P 500 weekly technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. So before I discuss the agenda of this S&P 500 weekly technical analysis, if you also want to get the daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. Weekly chart means the big picture for a month or so. Now there is a significant improvement on this weekly chart, okay, that because of this heavy or good bullish movement in the previous week. So earlier we have seen stochastic RSI was bearish, MACD was bearish. So now stochastic RSI has shown some improvement. There will come a bullish crossover in the stochastic RSI, and that will then remove or will take off the pressure which is there on the stock market, means the S&P 500, Nasdaq or so. So I will discuss in detail the weekly chart and I will show you that how this is going to work. Because see, as long as MACD is trading bearish, right, there will always be a chance of seeing a sudden fall, right? So that is why once the stochastic RSI is out, means once it is bullish, in that case the probability of a sudden fall or the fall, okay, it will reduce by 50%, right? Now comes the second point here. This is the S&P 500 technical analysis on the daily chart. Daily chart means a short-term picture for a week or for 2 weeks or so. So now on the daily chart, it is 100% absolute bullish, and because of the formation of 1 and 2, these the red candles, stochastic RSI is not expected to hit the saturation level at least for 2 to 3 days. Okay, but if there comes back to back green candles in next 3 days, around 3 days, in that case it will again hit the saturation, then again it will be forced to come down. And other than that, there is the overbought condition. Okay, if this continues, in that case also the S&P 500 can hit the overbought condition. But before that, Dow Jones is expected to hit the overbought condition. Okay, then comes the third point of the agenda: probable movement of the SP500 from August 26th, which is Monday, to August 30th, that will be Friday. So what is going to happen, how that is going to happen, and why that will happen in the S&P 500, I will discuss everything in detail here. But guys, again let me remind you that all of these three sections are interlinked, are interconnected, because I emphasize on the candles, the weekly candles and the daily candles here in the first and the second section. So in a manner, I cover 30 to 40% of the probable movement in the first and the second point of the agenda itself. So that is why it is highly recommended that you should watch all of these, the three sections, in order to understand what is going to happen in the S&P 500 in the next week, how that is going to happen in the S&P 500, and why that will happen in the S&P 500 in the next week. Now guys, I am going to discuss the first point of the agenda, and here I will do the technical analysis of the S&P 500 on the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. So let's first discuss the candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now this the first candle. So it's a good or a heavy bullish candle because the closing of the candle is near to the high of the candle. Okay, it is not at absolute, near to the high of the candle. However, this does not confirm any gap up open on Monday, but yes, it does confirm, or it does indicate that irrespective of any open on Monday, we can anticipate a bullish movement. Now, this is the weekly candle of the Dow Jones. Again, okay, same kind of candle. It also represents the continuation of the, or it also tells us the continuation of the bullish movement, and irrespective of any open, initial bullish movement on Monday, or irrespective of any open, an initial or intraday bullish movement on Monday, means even if there comes a little fall, then also it will correct and it will move up. But now comes one more important thing, and what is that? This is the continuation of the bullish movement. Okay, the candles are signifying the continuation of the bullish movement, no doubt about that, continuation of the bullish movement. However, there is a hurdle, because if you notice, the high of this the candle was 41,208, and through this the Dow Jones has surpassed the recent high, but this was the all-time high, and the all-time high was 41,376. 41,376. Okay, now 41,376 is quite near to 41,208. Okay, the high of this the recent candle. In case of the S&P 500, the high was 5643, approx 43 or so. Okay, and the all-time high was 5670. 5670. So 5643 is quite near to 5670, and a similar kind of condition or situation is seen in the Dow Jones. Because there was a bullish breakout through the trend line, and the Dow Jones managed to sustain and close above this the trend line. Okay, means confirm this a bullish breakout. It allows the Dow Jones to move up. It allows the entire US stock market to move up. But because of this all-time high levels in the Dow Jones as well as in the S&P 500, both of these the indices, or we can say the entire US stock market, is going to face heavy resistance and will be a little reluctant. I'm not saying that reluctant for 1 month or so, no. it will be reluctant for 1, 2 or 3 days. Okay, but initially when it reaches to this the all-time high, it will be reluctant. Now once either of these, either the Dow Jones breaches 41376 mark or the S&P 500 breaches 5670 mark, either of these, okay, once this is seen either in the S&P 500 or in the Dow Jones, or if it is seen in both of the indices, then perfect. Okay, once that happens, then it will bring a new wave of bullishness. See, it is already 100% absolute bullish, but then there will be a new wave of bullishness that will force or drive the S&P 500 and the entire US stock market to move up further. Okay. So I'll discuss this in detail in the last point of the agenda. Now let's talk about the technicals. In terms of the technicals, okay, so once again, clear fan out in the moving averages, okay, and S&P 500 is bullish through the moving averages, S&P 500 is bullish through the Bollinger Bands, S&P 500 is bullish through the Ichimoku cloud, and S&P 500 is bearish through the MACD. However, because of this, the continuation of the bullish movement, now there is a bullish change in the stochastic RSI. So now Dow Jones and stochastic RSI, they are opposing each other. This means the pressure that was there until last week, that pressure, it has now reduced by 50%, but it is still there and it will remain there as long as Dow Jones, as long as MACD is moving average convergence divergence. So as long as MACD is trading bearish, this pressure will be there on the S&P 500. Okay, and what does that mean? This means a sudden fall, sudden or heavy fall, or an unplanned fall. Okay, it can be seen, right, or it can happen. Now other than that, if the bullish movement continues, S&P 500 on the weekly chart will hit the overbought and the absolute saturation. This means that MACD is already bearish, right? But at the same time, S&P 500 is hitting the overbought and saturation. MACD is bearish, overbought, saturation is there. This means that it is a perfect cocktail or a perfect condition to see a surprise fall or an unplanned fall. Okay, but the good thing is that irrespective of even if there comes a fall, then also the S&P 500 will be able to recover. Okay, so but yes, if there comes a fall which is not a kind of surprise in nature, for example on Thursday, okay, we have seen a fall. So the first hourly candle, it was a heavy technical bearish candle, so that has confirmed also. And also a rejection in the Dow Jones. Okay, so all of these are conditions were seen at the same time. Okay, because of that we have seen a planned fall. So on Thursday that was not an unplanned fall, that was a planned fall because the technical conditions were there. Okay, so if that kind of fall is seen, in that case recovery might take a little more time, like 3 to 4 days or so. Okay, but unplanned fall, intraday surprise fall or so, okay, S&P 500 and the market will be in a condition to recover. Okay, so that's not a problem, right? So here we will say that S&P 500 on the weekly chart is 80% bullish. It is 80% bullish. Now in terms of the Dow Jones, okay, what we can see is that the Dow Jones is more bullish as compared to the S&P 500, because Dow Jones is heavily bullish through the moving averages, through the Bollinger Bands, through the Ichimoku cloud, and also the best part is the MACD. The MACD of the Dow Jones is also supporting the bullish movement because it is bullish. Okay, and stochastic RSI. Okay, stochastic RSI has also turned bullish, right? And yes, if the bullish movement continues, then the Dow Jones will also enter into the overbought condition and saturation. This means the same condition, the overbought and the saturation, it will be seen at the same time simultaneously in the S&P 500, Dow Jones, and then by default it will be there in the Nasdaq. Okay, so this means that And yes, and at the same time the MACD of the S&P 500 will be seen bearish. So that the pressure through the MACD and these the conditions in both of the indices or in all of the indices, okay, can trigger a surprise or a sudden fall or a heavy fall. And that fall, yes, now that fall might not be seen only up to one day, okay, but it might be seen for 2 or maximum 3 days continuation, okay, 2 or 3 days, okay. So I hope this is clear. And now, yes, one more thing. Dow Jones is now 100% absolute bullish on the weekly chart. Okay, so now everything looks good, perfectly aligned, okay, perfect in a manner that Dow Jones is 100% bullish, S&P 500 is 80% bullish, means there seems no problem, okay, nothing. However, if you know the technicals or if you have the knowledge of the technicals, okay, then you will be able to see that there is a serious problem, okay, that everything looks bullish, everything looks good, but there is a serious problem. And what is that serious problem? That serious problem is the MACD of the Dow Jones. So what's the big deal with the MACD of the Dow Jones? If you have subscribed to my YouTube channel for last many months or years, okay, then in certain cases or in few cases I have shown you this kind of pattern or movement in the MACD. Okay, see, MACD is actually known for its linear movement. Okay, means once it has gone bullish, then it will remain bullish for many weeks or months. It will not change. Okay, once it has gone bearish, then it will not change bearish. It will remain bearish for a few weeks or for a few months. Okay, so that is why MACD is MACD is widely used, okay, and is heavily trusted by the technical analyst. Okay, so but now here if you notice, in last from 15th from the week of July 15th, okay, what we have noticed that there was a bullish crossover, fine, then it was supposed to remain bullish for the week of 22nd of July. It was bullish, perfect, no problem. But then there was a heavy fall, and that was the week of July 29. There was a heavy fall. Because of that heavy fall, it again gave a bearish crossover, and then in the next week, means the week of August 5th, okay, it traded bearish, fine. Okay, so far everything is good. And then again a heavy bullish movement, okay, because of the favorable retail sales data, but that was now negated by the revision in the non-farm payrolls, okay, and non-farm payrolls were revised and were seen, okay, like 30% or 40% down from the earlier estimate, indicating that a similar situation that was seen back in 2008 2009, okay, the Great Recession, okay, that is there. Okay, anyways, we are talking about the numbers, the MACD. So because of that favorable retail sales data, it moved up heavily, and now in the previous week, okay, it is again bullish. So what we have seen is that up down up down up down, and this is against the MACD itself, because MACD is known for its linear movement irrespective of any kind of movement. This means, what does that mean? This means that someone is swinging the market. Although we know that market is generally or heavily manipulated most of the times, okay, but whenever these kind of conditions are seen, then these kind of, especially in the MACD, then this confirms, or this is kind of, you can say, is a kind of proof that someone is heavily swinging the market, knowingly, everything in advance, what is expected to come, what data will be published, okay, what will happen, and whether it should be traded bearish, bullish. Someone is heavily swinging the market. And what happens in this kind of situation? In this kind of situation, historically we have seen that for some time the market, when I say the market, now here I am talking about the entire market, okay, the entire US stock market, that the market, that they are trying, whosoever is that, okay, one person or more than one person, or a cartel, okay, they will keep, or they are trying to keep the market bullish for some time, because they know that it is going to give up heavily, it is going to fall. Okay, and this is something similar to what we have seen, that when last time S&P 500 came down and it was trading around it was trading in 4000 levels. Okay, 4100, it hit 4120 or 41 something. Okay, that was there. Back then a similar kind of condition, similar kind of situation was seen, because before that it was S&P 500 was trading in 5000s. Okay, or around 5000, it was moving up irrespective of anything. Okay, but through MACD, okay, we knew that something is not right, and then we have seen sudden fall on that time. It came down by 15% or so. Okay, so let's not, so even if we forget about the data, okay, Fed chairman, dovish comments, okay, or the cartel members, or then also we know that something is not right. Okay, this means that now, if next at least 2 weeks, 2 to 3 weeks, you can say, means by 15th of September. Okay, by 15th of September, if the Dow Jones manages to sustain bullish or heavily bullish, in that case it's fine. 15th September means 3 weeks, around 3 weeks. Okay, if it managed to sustain bullish, and if the MACD gives a linear movement by 15th or around 15th or 20th September, then fine. Okay, in that case, whatever the swing movement was given or was seen, okay, through this, so because of these 3 to 4 weekly bullish weekly candles, okay, or a linear movement in the MACD, it will be adjusted and it will be acceptable. Okay, however, if there comes some kind of fall or heavy fall, and remember that on September 18th, okay, there will be the FOMC decision. Okay, projections will be published. Okay, and so this means that we should wait until September 18th, okay, to see the true outcome. So if the entire market, if the entire US stock market is able to sustain and is able to absorb the September 18th event, okay, remains bullish, in that case there is no problem. In that case, the fall that historically we have seen will not be there. Okay, rather there will be the continuation of the bullish movement. The US stock market will hit the new all-time high levels, not a problem. Okay, but historically, like 100% of the times, okay, such kind of situation, the zigzag pattern, okay, force the swing, okay, there's a movement in the MACD of the S&P 500 and the Dow Jones, and I'm talking about the weekly chart. Okay, however, the same can be seen through the daily chart. Okay, but daily chart, you will see that daily up down also, but weekly chart, okay, is weekly chart gives, okay, a better picture. So in this kind of situation, historically we have seen that it is a forced movement which eventually lead to a heavy fall or a great fall. So now guys, before I discuss the daily chart, I have this information to share with you. This is my S&P 500 knowledge transfer program, or stock market knowledge transfer program. Through this program, I teach the movement, strategies, trend, analysis, technicals, predictions. Prediction means predicting the movement even before it happens. Okay, support and resistance levels, and much more. The motto of the program is to help you become self-reliant, and this program is delivered one-on-one basis only. And also, whatever you are going to learn here, technicals, patterns, okay, movements, okay, some strategies, etc., you can apply these to any stock, any index, any currency, any commodity, any crypto, that is means anything that is traded in the stock market. And this is my email address, which I have also shared in the description of the video and also in the comment section. And this is the Google spreadsheet. More details are there in the Google spreadsheet. And when you open the Google spreadsheet, then you will see that I have mentioned everything in detail, what I am going to share, what I am going to teach, the basics and the advanced. I will share the modified technical, modified values of these technical indicators, and the trading strategies, and the options calculator, calculating the options premium. And I will teach you how to use the binomial and Black-Scholes calculator to get the values within 30 seconds. And also the option strategies. Other than that, the calculated support and resistance levels for next 5 years, the limits, how to predict the movement, how to deduce the trend, current trend, and everything in detail. And these are some important terms and conditions, and these are the snapshots of the recent meetings. So guys, whenever you want to participate in this program, then this is my email address, and I've also shared this information in the description of the video and also in the comment section. And guys, if you have any questions that you want to ask, or if you want to participate in the program, then this is my email address, and I've given the link to this program in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. So now let's first discuss the candle. It's a bullish candle, but it's not a heavy bullish candle. Although the S&P 500 gained more than 1%, but the shape of the candle and the size of the candle is not heavy. Okay. This candle simply indicates the continuation of the bullish movement or the bullish sentiments, but this candle does not confirm any gap up open. Also, it does not confirm that there will be an initial bullish movement irrespective of any open. Now, this is the bullish candle of the Dow Jones. Here in case of the Dow Jones, it's a heavy bullish candle. Closing of the candle is above the previous candle, the closing and open of the previous candle. This candle is heavy and this candle indicates, but however, and also because there was a bullish breakout, okay, this candle indicates a gap up open, or irrespective of any open, an initial bullish movement or an intraday bullish movement or an intraday recovery if there comes any fall. So considering the weekly chart, the daily chart of the S&P 500, Dow Jones and everything, okay, what we can conclude is that irrespective of anything, on Monday we can anticipate an initial bullish movement or an intraday bullish movement. Okay, so now bullish sentiments, an initial bullish movement or intraday bullish movement is there, considering all of the weekly and the daily chart of the S&P 500 as well as the Dow Jones. Now let's talk about the technical indicators. So now in terms of the technicals, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now in terms of the technicals, moving averages, clear fan out, aligned bullish, closing is above the moving averages. This means SP 500 is bullish through the moving averages. SP 500 is bullish through the Bollinger Bands, and also the SP 500 is bullish through the Ichimoku cloud. Now some other technical indicators: MACD, linear movement and a bullish movement. So MACD is bullish, means S&P 500 is bullish through MACD. Also the stochastic RSI, so S&P 500 is bullish through the stochastic RSI. It is neither overbought nor saturated. However, if there comes I think at least two candles are needed. Yep, okay. So two candles, we can say minimum 2 or 3 candles, 2 candles, okay. Then we can anticipate that the stochastic RSI will again hit the saturation. Okay. However, the S&P 500 is not expected to hit the overbought condition here. Okay, in next 2 or 3 days, even if it goes bullish. Okay, but yes, it can hit the saturation because the stochastic RSI is trading very near to the saturation levels. So here on the daily chart, S&P 500 is 100% absolute bullish. Okay. Now comes the Dow Jones. Dow Jones, okay, what we can see here is that a clear fan out in the moving averages, closing is above the moving averages. Okay, so Dow Jones is bullish through the moving averages, and Bollinger Bands, yes, Dow Jones is bullish through the Bollinger Bands, Dow Jones is bullish through the Ichimoku cloud. Okay, everything looks good. And also the Dow Jones is bullish through the MACD, and Dow Jones is bullish through the stochastic RSI. Dow Jones is neither overbought nor saturated. But yes, in next 1 or 2 days, if the bullish movement continues, or if there comes these back to back green candles, or just normal bearish candles, in that case Dow Jones is expected to hit the absolute saturation through the stochastic RSI. Okay, and then it doesn't matter what the S&P 500 is doing, because in that case Dow Jones will be forced to come down to test the trend line, and the same will be seen in the S&P 500. So here again, Dow Jones is 100% absolute bullish on the daily chart. However, the most important part is that Dow Jones is 100% absolute bullish on the daily chart, and also we have seen that the Dow Jones is 100% absolute bullish on the weekly chart. This means that Dow Jones is the only index in the US stock market which is trading at the in this particular condition, which means the absolute bullish condition. And other than that, there's the recent bullish breakout. So this means that whatever bullish movement we are going to see in the US stock market, that bullish movement will be because of the Dow Jones and not because of the Nasdaq or S&P 500. And here in case of the S&P 500, it was 80% bullish on the weekly chart. It is 100% bullish on the daily chart. This means overall around 90%. Means it is heavily bullish, but it is not absolute bullish. Overall it is 90% bullish on the means S&P 500 is bullish, okay, considering the weekly and the daily chart. Okay, this means continuation of the bullish movement. However, this bullish movement will be subjected to the recent highs, that was 5670 in the S&P 500 and 41,376 in the Dow Jones. But whatever is going to happen, I will keep you posted through these daily precise updates of the S&P 500 and also the Dow Jones if you are my Patreon community member. But if you have not yet joined my Patreon community, then let me tell you that along with these, the daily precise updates of the S&P 500 and the Dow Jones every day from Monday through Friday, I also give these the stock market opportunities in the premium stocks of the US stock market, minimum 5 to 10 every week. So guys, whenever you want to join my Patreon community, I've given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will notice that there are these two levels or two tiers. This is daily S&P 500 updates for non-US and Canada residents. This is daily S&P 500 updates for US and Canada residents only. So whenever you subscribe to either of these, then you will be getting daily S&P 500 analysis, updates, probable movement and the opportunities minimum 5 to 10 every week. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday, as well as the stock market opportunities. And they know that what is expected to happen and why that is expected to happen and how that will happen. So guys, whenever you want to join my Patreon community in order to get these daily precise updates of the S&P 500 and the Dow Jones every day from Monday through Friday, then I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement. But guys, before that, let me remind you that I've already discussed some of the probable movement in the first part of the agenda, that was the weekly chart, and the second part of the agenda, that was the daily chart. And in the weekly chart section, I've shown you, okay, that someone is swinging the market, okay, and the implications of the same, right? In the daily chart section, I've shown you that the market is bullish, but only because of the Dow Jones. If the Dow Jones fails, then everything will fail. Okay. Now, the important things or the events, okay, for the next week. So the most important thing is that on Friday, that will be August 30th, PCE data and the core PCE data will be published. And this data will heavily impact the movement of the stock market. Anyway, so let's not anticipate, okay? But what we know is that Friday, PCE and the core PCE data. However, there is one more event, okay? And this event is Wednesday. Wednesday, after market hours, Nvidia will post the earnings. And what we know is that Nvidia is a meme stock, okay, because every day Nvidia gives 5 to 10% movement. Because this data will be published after market hour, this means that its impact will be seen on Thursday. This means that Thursday will be volatile and then Friday will be volatile. Yes, on Wednesday, one more thing will be there, and this is the GDP data estimate for the second quarter. Okay. However, this is not expected to make heavy impact on the stock market. So this is the data. Now let's talk about the numbers, movement, bullish movement, bearish movement. Okay. In the S&P 500 through the Dow Jones, and guys, once again, let me remind you that the purpose of using the chart of the Dow Jones is to get a clear understanding, is to get a clear movement, okay, or to fine tune the predictions of the S&P 500, right? So that is why I use the Dow Jones, okay, and I discuss the daily and the weekly chart of the Dow Jones, right? So guys, before I discuss, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, in terms of the numbers, okay, what we know is that the high of this candle 564322, 564322, okay, and also you'll be surprised to know that 5644 is my calculated resistance level. And when the S&P 500 was moving up on Thursday, then in my first update I mentioned that now the S&P 500 is expected to trade in between 5644. If the S&P 500 remains reluctant, if it remains reluctant to breach 5644, in that case what will happen? Then there will be 5550 again in the picture, okay. And guys, remember 5566, okay, it's just a support, it's not a strong support, okay. See, this was the high of the candle, that was 5566, okay, and now this is out of the picture because S&P 500 is trading well above 5566. Whenever it comes down, there is no guarantee that there will be an absolute, means it will act as an absolute support, S&P 500 will sustain, and no, it will just act as just a normal support, okay, but it doesn't have power to hold the fall if there comes, or if there is there's a heavy fall, right? 5644, okay. Once the S&P 500 breaches 5644, and also we need one closing above 5644. Once it breaches 5644, fine, that's fine, not a problem, breaches. But if it fails to give closing above 5644, rather closes below 5644, in that case it will create a problem for itself, because it will be seen as a rejection, right? And in that case of rejection, 5550 will be open. And I'm not saying it will come down and will hit 5550 absolutely, because there are some other strong support levels, but 5550 is finally okay, it will be there, right? Because recently Dow Jones has gained, okay, or we have seen the bullish breakout, and if the Dow Jones gets more bullish movement or heavy bullish movement, okay, then what will happen? See, the closing of this candle was 41,175, okay. Recent high was 41,198, 41,198, okay. So although Dow Jones managed to breach 41,198, but it closed below 41,198. So this means that there is a bullish breakout, but this bullish breakout doesn't confirm, doesn't guarantee that it will be able to, means it will force the entire US stock market to move up or up or up. But yes, what it needs to do, what the Dow Jones must do is that it must, or it should try to move up, or it must try to move up, and it must give a closing above 41,198. Once there comes a closing above 41,198, then it will bring Dow Jones in a condition wherein the all-time high, that was 41,376, 41,376, okay, it will be just, or it will be quite near to that, the mark, and the Dow Jones will be in a condition to breach, to hit and breach 41,376. Although initially it will show, the Dow Jones will show reluctance, okay, because 41,198, because of this, the 41,198, 41,376, okay, the S&P 500 will still, the S&P 500 can still be seen like that. It is trying to move up. It has breached 5644, but it was shy of the all-time high, that was 5670, and also it gave a closing below the previous close, sorry, let's say, okay, means below this, the 5644. So although it moved up, it breached, okay, it was shy of 5670, it came down, closed below 5644, means a rejection, okay, a rejection, right? That is why 564, a closing above 5644 is must. It must happen, okay, so that S&P 500 can come in a condition wherein it can breach 5670. So a closing above 5644 in the S&P 500, a closing above 41,198 in case of the Dow Jones. If this is seen, and if this is seen simultaneously, then it will be good for the bulls and for the US stock market, because in that case, with a little efforts, see, it will show some reluctance to breach Dow Jones, and as the S&P 500 will show some reluctance to breach their respective all-time high levels. But once there comes a closing above 5644 and 41,198 in the Dow Jones, then it will be in a condition wherein with a little efforts it will be able to breach. And once there comes a breach, I'm not saying a closing, I'm simply saying a breach. Once there comes a breach of 5670 and also 41,376, just a breach, even by 1 point or even by 0.5, okay, point or anything, but just a breach. Once there comes a breach, then it will bring new wave of bullishness in the US stock market, and that will then help the S&P 500 to move up to and beyond 5,700, okay, and the same thing, okay, it will be there in the Dow Jones, right? So this was the bullish condition. Bearish condition, if the Dow Jones fails to give a closing above 41,198, okay, yes, there is one more thing, that even if the S&P 500 manages to close above 5644, but the Dow Jones fails to give a closing above 41,198, then the condition of the Dow Jones will be applicable on the S&P 500. Why? Because it was the Dow Jones, or it is the Dow Jones which is driving the bull market. Although there is the Nvidia, the meme stock, which is driving the S&P 500 and the Nasdaq, but if the Dow Jones remains under pressure, in that case Nvidia won't be able to do anything, okay. So the Dow Jones condition, this means that 41,198, okay, and these are things. So if the Dow Jones remains, it fails to give a closing above 41,198, then what it will do, either on Monday or on Tuesday, okay, it will come down and will test the trend line. Testing the trend line does not mean that it cannot lose the trend line. It can lose the trend line for 5 minutes, 10 minutes, 15 minutes, 1 hour or so, okay, but the question is that whether it will be able to close above the trend line or not. That is the most important part, okay, and most likely it should be able to close above the trend line, Okay, as long as it remains above the trend line, whether it is red or green doesn't matter, but as long as it is trading above the trend line, it will remain bullish, not a problem. The problem will happen only when it gives a closing below the trend line. In that case, the bullish breakout, it will be cancelled. However, chances are not much that this kind of situation will be there. Okay, but in that case, bullish breakout will cancel, and then entire market, not just Dow Jones, but the entire market will come down. Okay. In case of the SP 500, okay, the similar condition 5644, there must come a closing above 5644. But if it gives a closing, sorry, if it breaches 5644, remains reluctant, in that case, the door to 5550 will remain open. Okay, because in that case, yes, there are these are two intermediate heavy support levels. Once, okay, but rejection from here, okay, can help the S&P 500 to sustain at these levels for 1 day or 2 days. Otherwise, it will be forced to come down to 5550. Okay, but a movement, a bullish movement, or a closing above this, the 5644 means 5700 or 5700 or more. Okay, now if, see, again, chances are like 25% to 30%. Okay, 25 to 30% for this, the good bearish movement or heavy bearish movement. And the only condition for the bearish movement is that Dow Jones must give a closing below the trend line. Okay, I'm not talking about S&P 500, I'm talking about Dow Jones. Okay, so it doesn't matter what the S&P 500 is doing, but if the Dow Jones closes below the trend line, then the bearish condition will come into the picture. See, when I say the bearish condition, I'm talking about more than 1% fall or more than 2% fall. Okay, a normal intraday bearish movement, 0.5% fall, 0.6% fall. Okay, no, that is normal. That is the normal behavior of an index. That's not a problem. Okay, so now this means that it will be there. And also, because there was the 5566, as I mentioned, that 5566 will still act as support, but it is just a normal support. You cannot trust that whenever S&P 500 will come down, it will sustain heavily at, no. Recently, we have seen it was coming down, and I mentioned to my Patreon community members that it will be able to breach 5566. Do not rely on 5566, but there is a moving average. So even if it breaches 5566, it will not be, or it might not be able to hit this 5550. Okay, rather it will be able to recover instantly and will try to sustain at or around, okay, 5566. Okay, so in case of the bearish condition, if that comes into the picture, especially on Thursday, when Nvidia posts the earnings. Okay, see, as of now, the only thing that can force the entire US stock market, okay, or in a manner the Dow Jones also, okay, that is the Nvidia. If Nvidia posts bad earnings, in that case, what will happen? In that case, the bearish condition, this will be seen in the picture. Okay, although on Monday, okay, on Monday the data, the durable goods orders data will be published. Okay, that can also drive the market up or down, up and down. Okay, but it will be actually Thursday. Okay, when Nvidia will post the earnings, and then only we will come to know, okay, where it is heading to. Then immediately after 1 day on Friday, it will be PCE data, or the core PCE data. So if the Nvidia gives, okay, better than expected earnings or as expected, in that case market will go bullish, heavily bullish, 5700, not a problem. Bad earnings means bearish condition will be seen, or it will be invoked, and in that case it will be coming down. And then in that case, if you remember, there was a trend line, so it will have to come down to the trend line level, okay, in order to, and this was the technical obligation. Okay, so it's good in a manner that because of Nvidia, because of some event, it will come down, it will test the trend line. Once it tests the trend line, sustains at the trend line, then it can resume its bullish movement, not a problem. Okay, so in this manner, the bearish movement will be there. Heavy bearish movement will not come. Okay, or so heavy bearish movement is not expected to come unless some data, for example durable goods orders data, okay, if it really goes bad or worse, okay, then that will be the first factor on Monday that can trigger. Okay, but again that is also not expected to trigger heavy fall, just normal fall, 0.5%, 1% or so. Okay, but it will be actually on Thursday Nvidia, okay, that can do so, and then on Friday, back to back Thursday and Friday. Okay, otherwise everything looks good, and after gaining 5644, 5670, 5700 is okay. And in case of the Dow Jones, 41,198 are closing above that, means it is going to breach its all-time high, and then further, okay, it will be able to move up. But whatever is going to happen or whatever will happen, I will keep you posted through these daily precise updates of the S&P 500, which I give to my Patreon community members every day from Monday through Friday. And guys, if you have not yet joined my Patreon community, then I have given the link in the description of the video and also in the comment section. You can follow the link and you can join my Patreon community. So guys, hit like if you like this video, and subscribe to my YouTube channel if you have not yet subscribed. And also if you have any questions that you want to ask, then please feel free to ask your question through the comment section. So guys, this was my S&P 500 weekly technical analysis for the week of August 26th, means from August 26th, which is Monday, to August 30th, that will be Friday.